Hi, this is Greg Unthink with the Referred team at Remax Preferred Group, and in today's Real Estate Investor Minute video, I'm going to address a question that we get emails on now and then that pertains to properties that actually have a negative cash flow, and is it a good idea to buy this kind of building? As a rule, the answer is probably no. There are some exceptions to that, which we'll talk about. But for the most part, if you're buying a commercial building, you want that to cash flow. And if it doesn't, there's probably a reason for that that would indicate that you might want to stay away from it. So the first thing that you want to do is you want to look at the net operating income. And this is, of course, the income that the building brings in minus the expenses. And is that a positive or negative cash flow? Also, what is the cap rate? The cap rate is the net operating income figure divided by the price that you're considering paying for the property. That's going to give you a percentage. And as a rule, we want that percentage to be 10% or more, depending on the part of town. There are cases where a lower cap rate can still work, but for the most part, that's kind of what we look at. The other thing is, what kind of debt service and down payment are you looking at? If you need to put a lot more down to make a property cash flow than what the standard market down payment rate is, then it's probably something that you might want to stay away from. So for example, if you're putting more than 20 or 30% down, if I'm putting half down, if I'm paying all cash just to get it to cash flow, there's probably some better buildings out there for you. And then when it's all said and done, after your debt service payment, if you have one, look at that number and is that cash flow acceptable? Does it meet your goals and why you're buying the building in the first place? An exception would be some kind of value add factor with that building, perhaps with some planned capital improvements. The building is going to perform a lot better. So the initial cash flow that you look at when you're first looking at the building as is might change with those improvements, making it a whole new ball game. There may be something going on with the area that's going to take the rents and make them much higher. That's something to look at as well. If you go to our website, CincinnatiRealEstateInvesting.com, you can download a free report that talks about the best way to invest in the Cincinnati area to get cash flow. So go ahead and do that now, and we'll see you on that website. Thank you so much for watching, and best wishes in your investing.